So great having you on the podcast. How are you today?
I'm great. Thanks for having me.
I'm really excited to have you. Let's dive right in. First, would love to hear a little bit about your background and then a brief history of the clearinghouse.
Yeah, absolutely. So my name's Elena Casal. I run our client function here at the Clearinghouse, and we are, I would say, at the heart of payments each and every day in the US payment system. I actually spent all of my career in payments one way or another. I started doing economic analysis, so I am like a geek of all geeks, understanding how money moves and the impact to consumers, to businesses, to banks, to credit unions, kind of the whole ecosystem. So I've worked across the Federal Reserve, as well as some fintechs, large and small, so payment processors. And then I joined here about 5 years ago, looking at how do we work with our customers differently as they evolve? Where do we go out to them to understand how they think about payments, and that intersection of deposits and loans, right, is really where money moves. And so that's what we focus on. I will say the clearinghouse has been around for a while, where we've been in the industry for over 170 years. And we've evolved just as the industry has evolved. We process ACH payments, wires, so high value payments, low value payments, check images, and real time payments, which I know we'll talk a little bit more about, but that we started that in 2017. So that's kind of new for us and new for the industry. And we look after all of our clients, big and small. And we process like $2 trillion a day, which is pretty fun and impactful for the payment system.
I was gonna do That's a big number. Okay. Um, Talk me through just some things I'm a little interested in. I'd love for you to explain. First off, what are instant payments, and really what makes these types of payments possible?
Yeah, so instant payments for us is moving money from end to end, from one individual or business to another individual or business in real time. So within, say, 15 seconds or less, having a true real time experience where the complete life cycle of that payment, what the consumer expects, as well as the financial institutions along the way, money moves in multiple stages, all of that be instantly done. So there's no settlement risk involved in the transaction. There's no need to worry about one party maybe not having sufficient funds, and that includes financial institutions. So anyone along the chain, that all is done in 15 seconds or less, which really enables us to have the real-time experience that we all live and breathe each and every day when we, do our daily activities and our feeds. And so that's the heart of what our RTP network is about. How do we move money instantly? And I don't want to necessarily say faster, right? It's exactly when the client or individual wants it to move at the precision and control point that they want it to get done, which I think is really, I would say, making it clear that it doesn't need to be, oh, I'm, getting debited faster, meaning my money's leaving my account faster. Well, it's actually when you want it to move rather than playing the game of, well, I think it's going to come out of my account one day and, my payroll comes another day, and playing that game of cash flow. So it's really eliminating that and making it more precision-based payments, which lends itself to a multiple types of individuals and businesses that need that, right? So everyone moves money one shape or form, whether we're moving money between accounts or businesses are getting paid for their invoices that they need to get paid. They all want to do it at the time that they want it. And so instant payments allows for kind of that evolution and rethinking of how money can move here in the US.
Let's continue kind of on. You mentioned some benefits in there. I want to continue on that. So, like, what are some additional benefits of these banks and financial institutions implementing instant payments?
Yeah. So one area I think I do start from the end consumer or business, right? Like what's the benefit to me changing the way I budget or I do cash flow, changing the way, small businesses look at their cash flow. A major benefit is understanding and having visibility to when money is coming in and out. Whereas in other instruments, there's a little bit of a forecasting, a guessing, and that comes into effect, which is all okay, but that implies there's risk and they're subject to errors and exception processing. And so real-time payments, what we want from it is how do I eliminate that risk or reduce it significantly such that the payment is not the problem, right? We go about our business and our daily lives, and the money is like the last thing we want to do, to transact money movement. And so we try to make that. So there's reducing friction, I would say, in the overall life cycle of what a business or individual wants to do. Another area that isn't really talked about, but I think is really important is a confirmation. And that sounds maybe a bit geeky, but when say you and I are, splitting a bill or moving money and we are like a small business shop and like transacting, I find out immediately that I got paid. And that confirmation allows me then to move on to other things, close my invoice books, move on, to the tasks, have trust between the two parties that a payment is done and final. And that confirmation really allows that to happen, not the payment itself. So we do a lot. There's a lot of activity involved related to when I get that confirmation back. Okay, now I can close my payables and my receivables books. I can, as an accountant, can close that book and move on. That's really one of the softer benefits, I'd say, that we're starting to see more and more in that transparency or the life cycle of a payment.
Now, what challenges continue to exist in implementing these real-time payments, specifically for the financial institutions?
Yeah, I think so. I've been in, the fintech side where we go in and we try to transform payments at financial institutions, and the amount of different technology that exists either in their own shop that they're own or their partners that they work with has not evolved yet to allow for a true real-time experience. So we, go back to the beginning of the conversation. You say, what makes it really instant and what does that mean? And I'm like, 15 seconds, it's done. The amount of applications that it has to hit within a financial institution is like 50 to 60, right? So you have to go between online banking to risk management of the client, who's your customer, to back office processing, to connecting to your core deposits. Not everything is in real time. So one of the biggest challenges is working with our financial institutions on, okay, what does that evolution of technology look like? How can I evolve it with your partners that you're dependent on in order to even technically be ready to do this, let alone how do I market it correctly? How does it land to my consumer and corporate base? Who am I really attracting with this? What kind of customer retention I want to do? That whole side of education has to happen, but you do have a technology spend one way or another that it has been a challenge. And usually people focus on the technology spend when you see the opportunity, right? You see the revenue opportunity, you see how it's going to help do customer retention or more deposits in the bank or credit union. That's like two-sided, and that dual part has to go hand in hand.
Now, talk me through a little bit about like what is the current reach and adoption of the RTP network among financial institutions look like?
Yeah, so maybe I'll just describe it in a couple ways because there's always like perceived reach and, different qualifiers that we have. And what I generally say is that for the organizations that have payments to send on different rails, say ACH and wires and some checks, the likelihood that your customers are reachable is like 90%. So we hear anecdotally that 90% of your payments that you send over different rails likely is going to hit an account that is reachable on the RTP network. Now, if I layer actual statistics, so we have almost 1,000 financial institutions on the RTP network. So we're getting, up increasing each and every day. We have over 70% what we call DDA reach, meaning all the money that sits at all the accounts around the country, we reach, three-quarters of those pretty much, right? So over 70% of all of the money that moves today. And then you overlay the reality of, well, people get paid electronically on certain accounts more than other accounts. That's that like anecdotal 90% that I talk about that it's reachable. So my mantra is just start sending and you'll see that reach happen.
Are there any particular key use cases for RTP, the RTP network today that you can share?
Yeah, we have quite a bit, and we always like to see the market evolve itself, right? So in between like deposit sweeps between businesses, as one example, we raised our dollar limit to $10 million in February. And so that allowed for more businesses to move funds if they have a multi-bank relationship to move funds in real time. So that's one example. Another one is related to small businesses getting their I would say their funding activities. So they transact all day with their customers. And then the next day, usually they get the funds from the card networks, the processors. And now with RTP, they can get that same day, immediately, on the weekends, on the evenings. So as a small business and their cash flow on weekends and evenings, that's been an increasing use case or example that they use. The gig economy, how people get paid is also evolving. So we've been able to help revolutionize kind of, I would say, the payroll whole industry on how do certain segments get paid, either contractors or part-time employees or hourly employees or, gig economy workers, how they get paid. That's been trending quite a bit. And then, the proliferation of digital wallets. So people have wallets for different means of transporting. They still need to move money in and out of those accounts. That happens on the RTP network as well. So those are just a few.
So how does the clearinghouse partner with fintechs and other tech service providers to really start using these instant payments?
Yeah, we have a whole group of folks on my team actually that work with over 20 to 30 vendors, technical service providers, partners that are all part of a payment lifecycle. So they either own the back office deposit systems that money needs to actually get credited to, or they own, I would say, the digital front end experience of online banking or your mobile banking app. And we work with all of them, one, to align with our vision and goals of here's where we're pushing the industry forward. Work with us to build those components and applications such that banks have the ability to do that. We also partner a lot with bankers, banks, and corporate credit unions that really service the community banks and credit unions more broadly. They build things as well along with our roadmap. So I think at the heart of our partnership is being on the same page of where we pushing, because we like to push the industry forward, right? We want more real-time payments. So partnering with them so they can build, going back to one of the challenges of legacy technology out there, they can be along with us for the journey and support those community banks so that it's easier for them to offer new loan disbursement, right, product, or if they're in real estate, being able to pay, the escrow fees or the closing costs. Like all of that needs an app, right? It needs a product. And so those are our ecosystem partners.
I guess any other trends in payments that particularly stand out to you that we haven't discussed here today?
Yeah, there's always going to be, I think, like a new trend that's coming. Something that I'm going to say two things that are we see front and center. One is the movement of more open banking and working with providers to extend that banking relationship. So having fintechs start to originate payments and that relationship with the banks. So we see that happening more and more. And what we're focused on as we do that is how can we do that safely and securely such that the consumers understand their obligations, right? So they're starting to originate a payment and share their banking credentials. So we are looking at ways to mask or tokenize those accounts such that they don't get stored in different areas with subject to maybe hacks or you can imagine the world that we live in today. So making it secure along the whole life cycle within the open banking experience. And then the other area is around what we call request for payment, a journey. So if you think about some debit instruments that we have, I give you a check or we do an ACH debit or even a card transaction. Those are all debit instruments where I'm pulling money from your account. An RFP or request for payment it really is a request. Please pay me. But then you have the control to pay, whereas it's not an automatic debit pull. So the credit and that control still exists. So we're on that journey to kind of revolutionize a lot how bill payments are done, how banks can be part of that journey where the money actually sits in the deposits. And that's a longer process, right? To rethink how people use maybe their debit instruments versus a credit push. So those two are front and center to us. Safety and security are kind of inherent in what we do, as you can imagine, processing $2 trillion a day. So we're going to do that very carefully and rigorously so we make sure no one is impacted.
I love it.
Yeah,
Elena, I want to thank you so much for coming on here, sharing more information about the clearinghouse, and really teaching us all a bunch of stuff, which I really enjoyed. Look forward to continuing the conversation with you in the future. But thanks again for coming on here today.
you're welcome. I look forward to it.